Thank you. It's good to see so many people here this morning. I'm Neal Cross. I'm the Chief Innovation Officer at DBS. I've been there about 5 months, and wow, what a journey. I've worked with banks for many years, and it's very much the most exciting bank I've ever seen at the moment. I'm going to take you through what I've done in my 5 months there and how we think about innovation. I'm not going to talk about what we've delivered. There's more stuff to come, a little bit about that. But really, how we think about innovation, and give you some things that you can learn if you want to do startups or release new products or services or marketing campaigns, sales campaigns, and how we structure the team and the processes we use. We're very, very scientific in innovation. And there's a massive sense of urgency in financial services at the moment. And it's undergoing a huge amount of change. Both from other financial services organisations, people like Fidor Bank are doing crowdfunding. Who would think a bank would do crowdfunding? And then outside the industry, we've got lots of competitors, and I'll talk a bit about how they operate and how they're going to impact financial services. First, I'll learn how to use a clicker. There we go. This is our CEO, and quite possibly the smartest person I've ever met, and he was why I joined the bank. Piyush, and I suppose my job is fairly easy when you have the CEO and the board really driving the bank to be more innovative. The realisation that actually, in 10 years' time, we might not have a bank. And in 10 years' time, there's going to be a lot less banks than there is around today. And I'll talk about where they're going to go. And banking as an industry, is very different to what consumer experiences are getting in the digital landscape. And a good example is this. So put your hand up if you've given a bank the same piece of information, like your name, more than 10 times. Okay, yeah, we've got 2 hands, must be at least 20 or 50. Now, put your hand up if you've given Facebook the same piece of information more than once. You over there, you've got a couple of accounts or something. And that's quite shocking, isn't it, really, when you look at it like that? There's things around regulation, we have to do that. But these tech companies and these e-commerce companies view information and how they understand the customers is drastically different from how a bank does it. And so there's a real urgency for us to change. So well. And so we're not worried about competing with other banks. We're pretty good at it. We've been doing it for years. We know what other banks have got, and they know what we've got. We compete on that landscape. These are the people we're more concerned about. And I think it's funny, I have lots of discussions and on lots of panels, and I keep getting asked by many of my friends in the West. They say, oh yeah, China, they just copy stuff in the West, don't they? I'm like, yeah, they do, and they do it better. Much better. So, PayPal and eBay, they're a bit old hat really when you look at those China giants up there. The fact that Alibaba looked across its database and went, oh, I see lots of people doing commerce. Now, I need to put a payment system in place, I'll do Alipay, and I can credit check them, actually. So why don't I lend them money? And I won't go and credit check them. I'll just instantly approve based on the commerce that I've seen them doing for the last couple of years. Very different from a bank. And then they thought, I've got these customers, maybe I should take some deposits. So they set up a fund supermarket. I think they got to $80 billion in 8 months, just from 80 million customers. It's now over $100 billion. I think it's the second largest fund in the world. They do now have a banking license. That's pretty worrying for banks. Payments, funds, lending, sounds like a bank, but at a much bigger scale. You look at the people on the right, they've tried to enter payments, some success, they've tried to enter banking, and they'll just keep doing it. They've got so much funding. They want to get into payments, not to make money off payments. Why do they want to get into payments? Any ideas? Data. What did you buy? They want to know what you bought. It's really critical to them. And the most successful, there's lots of failures in mobile payments, but the most successful is actually Starbucks. Starbucks now, I believe, makes 8% of its total profit just off the interest on those stored value cards. That's just the interest. So 8% of the profit just comes from that now. That's massive. And I'm sure we've all seen the news recently. These guys. I think these guys have actually got a good chance of putting this payments on. We'll see how it goes with the NFC terminals in the US. But I think they've cracked some of the hurdles, especially around the second factor. They've got a great brand. But, you know, they've still got a high percentage chance of failure. But what do you think they're going to do? Personally, my personal view, not the banks, is, you know, they're going to have the payment. They're working with the banks and the card companies. And then the merchants have iPads. We've probably all seen, you know, a few merchants in Singapore take payments off iPads and iPhones. So they've got one end of the payment. They'll push for the other end of the payment. And then if I was Tim Cook, I'd be looking at that going, why don't I just take the middle bit as well? Why don't I just close loop the thing? Apple are quite good at that. And I can just own the whole thing. And in fact, while I do that, I'm not going to charge the merchant 2.5%. I'm going to give it to the merchant to incentivize them. But then I'm going to say, I want your data. I want to know what my customers bought. But we'll see how they go. That will take a few years. They have to work with the industry to begin with. So this is pretty scary stuff. You know, we're getting people who are unregulated entering our industry at scale with huge brand awareness, massive amounts of money, huge technology teams, very, very innovative. And so as a bank, you've got to start to think, how are we going to navigate this? So why don't we just copy them? Actually, the best innovation, I actually like copying. I think it's a great thing. Obviously, as long as you don't break any patents. But a lot of innovation is copying. It's what you build on top of that, though. That's the key. And so DBS needs to act like an e-commerce company. And e-commerce companies, one of their core strengths is information. Just have to look at things like Amazon with a recommendation engine in there. The way they understand their customers is fundamentally different from a bank. And so we've started to act like an e-commerce company. We've got a joint venture with A-Star. I've got labs over at Fusionopolis. We have 10 of probably some of the brightest data scientists in the world. They can't tie their own shoelaces, but wow, they know data. Incredibly smart PhDs. And they're not just looking at data and thinking, okay, somebody bought this, then they're going to buy this, we can give them a reward. No, they're looking at data and going, answering questions like, what will Neal be doing next Tuesday at 4 p.m? What behaviour will he be exhibiting? And then how can we think about financial offering? Another thing we're looking at is, can we predict when an ATM will fail? Not when just the ATM, what part of the ATM will fail? So our service people can literally do it the night before, have that exact part, and then hence all of you get better ATM service. Is it working now? Excellent. So they're incredibly smart. It's took a long time. Obviously we're highly protective of our data. Highly protected. So we have this in a secure lab. The data gets cleansed. It goes through security. You know, we see our data as your lives. We treat it very differently. Another thing we've done, you probably see in the press, is a while ago signed an agreement with IBM Watson. I think we have half of IBM in Marina Bay Financial Centre at the moment. What we want to do with cognitive computing, big data takes you so far. Big data can actually be quite dumb. There's a famous case study of a big data exercise to try and work out what causes shark attacks. And it came up with a correlation that shark attacks is caused by ice cream. So they put some ice cream on a rope and tried to catch sharks. Didn't work. Obviously the correlation really was about weather. When it's warm, you buy ice cream. When it's warm, people go where the sharks live in the water. But cognitive computing wouldn't have said that. It would have understood our human world. And machines generally are understanding our human world. In the last 5 years, it's accelerated so much. And in ways maybe you haven't realized, when you pull out your camera, that's the eyes of the computer. And so when we look at things like augmented reality, we've got an app where you can hold up your phone. It will show you, when you point at a block of apartments, it will show you which ones are for sale. The machine is starting to understand our world, our emotions, us as humans, to such a degree, it's starting to get very, very exciting. And so we're not going to connect this to customers. You won't be bringing up and chatting to Watson. Hello, Mr. Customer. No, it will be there to help the relationship managers. Relationship managers have a very difficult life. It gets harder every year due to increased regulation, products, market volatility. And what they have to do, they have to understand all our products and remember every detail. They have to understand the market forces and currencies. Then they have to understand all their customers, which, depending on which level of RM they are, can be anywhere between 50 and a couple of hundred. And so they spend lots and lots of time doing this to give our customers the best product and service. Well, Watson is a digital assistant for them. And so there's a dashboard that says to the RM, hey, I've read all the products, I remember them all, I know the markets, I know our customers. I recommend you talk to this customer. Due to their risk appetite, I think this product will have a 52% chance of sale. And here's why, and it'll list all the sources. So it doesn't replace the RM, it assists them as if they had a physical person helping them. But what it does do, it turns the RM into something different. Actually an RM, a relationship manager. So they just spend more time with customers. So we act like an e-commerce company. We're acting like a startup as well, in a number of different ways. And I'll talk you through how we operate this. We use quite advanced processes. We use design thinking, and we call it human-centered design. And we pretty much use that for everything now, every new project. And also for improving all our current processes as well. So how we think about people onboarding, the forms they fill out, how they navigate internet banking, even how they walk around the branch. And human-centered design is pretty easy. Just spend time understanding the stakeholders, the ecosystem, design solutions that fit them, and then refine them. And that's it, really. It seems simple, doesn't it? But so many corporates, what they do is they look in their data set, look at their customers, yeah, I know what they want. Look at their product, yeah, we'll put some new features on that. And they get a massive marketing catapult full of dollars and fire it at their customers. What we say is, actually, no, that isn't the way we should do it anymore. We should really understand our customers. And we don't think of them as high net worth, which is how banks usually think of customers, or mass affluent. No, we actually build a stakeholder, we build a real representation of a person. When we design just for that person. And so we know, and then we go and test with customers like that person, we know that solution is going to be effective. And there's a direct correlation between, an inverse correlation, between the sophistication of your product and the amount of money you spend on marketing. The worse the product, the more you spend on marketing to get to the same point. Next thing is we use lean startup. So a business will come to me and say, hey Neil, I've got a problem. I'm like, great, okay. Another one, right? If we find the solution for you, will you execute on it? That's really important. If they say yes, I go, okay, this is your problem. Might be around branch queues. Our branch queues in these branches are too long. Can you help? Okay, let's look through our toolkit or innovation toolkit. You know, we have crowdsourcing, lean startup, design thinking, rapid prototyping, to name a few. We put some of those together and said, okay, can you give me like 20 of your staff? And we organise them into little startups. And we spend a week taking them through these processes so they understand the problem domain, the ecosystem. They go and interview customers. Then they start to design solutions and create prototypes. And then we move into the experimentation. And this is the biggest single thing we've learned recently, is test those assumptions. And we did this with branch queues, and I would have bet quite a lot of money, at least $3, that the people in the branch didn't need to be there. I would have assumed they don't like internet banking, or they don't like the internet. Or they were just passing, so they thought it was easy to go to a branch and not use mobile, or they don't use mobile banking. No, I was wrong. We went and interviewed them. All of them had to be there. And a lot of the time they had to be there, nothing to do with cash. It was like my internet second factor device has stopped working. Or I've got a letter I don't understand. And so we went through that and looked at all the reasons why they were there. Well, we tested the assumptions. Now what we do, next year we'll be running 1,000 experiments across the bank to test these assumptions. And it's the critical assumptions. What's the one assumption you're making about this product or service or campaign that if we're wrong, it will fail? And then how do we rapidly create an experiment? Lots of these tend to be paper prototypes. And then how do we get to the customer set and ask them the right question to the right person in the right way? And there's a big difference between the way we tend to have done this before. Mobile banking is a great example, or any mobile app. By the way, innovation isn't spelled APP. Just thought I'd get that out there now. And innovation's not technology. And if you show a customer a new shiny app, do you know what they say? Yeah, I love it. It's great. I'll use it. I think it's beautiful. Yeah, I want it. When it goes to market, they don't use it. Why is that? You never tested the core behavior change that needs to happen for that customer to use it. You just showed them something nice and new. And so we find the core assumption around this, and it could be that the customer, has to use a second factor to log in. It could be that the spending analysis requires them to just use a DBS card for it to function right. Whatever that core mechanic at play is, we scientifically test that to see if we give this value, will that behavior change? It's been a big learning for us. And so we set these startups running. The program runs for about 3 months. They create a name, and then every month they go to an executive board called the Dragon's Den. And I'm not sure Sujaan, our head of consumer banking, likes being called a dragon. And they give feedback to the execs. They can say 3 things. Yes, proceed, that's great. No, we don't like it, which they haven't said yet. Or kind of, can you go back and rework it? So it's a staged gate through to until we funnel down the final solutions. And then we give them back to the business. It's really important in innovation not to innovate. It sounds a bit odd, doesn't it? Something I learned. In my early career, I was very much about inventing stuff. I've got this great new idea for a bank. Let's have chat robots and massive touch walls. But now I realise actually, if people see me as an inventor, the culture at the bank won't change. No, but it's your job. You do it. And if we're owning the execution, the delivery, again, nothing will change. It's your job, it's your team. And so we're just facilitators. That's all we do. We've got 20,000 staff, and our job is to help them, teach them simple tools, get them a safe environment where they feel they can fail, and then help them solve real business problems and experiment. And we don't just do this with the low down in the organisation. We do it with the executives. So this was a session I ran in India, Mumbai, where I had the group head of strategy, group head of technology and operations, CIO, group head of digital, group head of marketing, and actually at the back there, Sandeep's head of online. I had them running around in Mumbai with paper prototypes asking customers. And for them, it's a real change. So we educate the people at the very top, we educate people all the way through the bank, and teach them new ways to do things. I'd like to show you a video. This is a video of one of our sessions. Right? Yeah. That's fine. It's okay, it's running a bit slow, but as a true presenter, I brought backups upon backups, and I bought 2 laptops, 2 copies on USB. So we'll just copy them onto the desktop, then run a bit quicker there. Yes. Oh no, I did that before. Had a disaster with Apple once. Yeah, it wouldn't play the presentation at all. So it was an HP conference. I spent an hour with no presentation, but the whole presentation was around the video. So I acted out the video on stage. It was hilarious. It was the best presentation I ever did, and probably the most stressful, in fairness. Okay, here we go.
The world's best processes for innovation.
I think that's where this whole lean startup methodology comes, where you start off with something, you experiment and you iterate and you go on looping and looping until you finally crack it and say, you know what, this is it. And you go to the customer and then finally the customer says, yes, you know what, I didn't even know this was something.
We'll step out a little bit and talk about who's going to be the winner. Winner in a dead tie is Ajay.
You see, the prizes are significant. A roll of tape. And so that's what we do. And then they return back to their business unit, and the feedback we get is they're a lot more committed, a lot more motivated, very excited about being part of the DBS innovation journey, and are there educating other people in their team about innovation practices. Oh, it works now. And so startups are very agile. Startups really understand customers, and startups create wonderful experiences that people want to use. So the third area we look at is how we can act like a tech company. And tech company is an interesting space, because actually tech companies tend to be that interface between us and our customers, whether it's mobile, whether it's online. And so they're very, very good at utilizing and monetizing technology trends to their advantage. So to act more like a tech company, we really have to get in to understand some of the technology megatrends. A new service that I'm doing in the innovation group is around future casting. So I go to a business unit and say, hey, do you want to understand where your business will be in 2020? And they say, you're going to tell me? I say, no, you are. We've got a process, give me 20 staff, we go through, we future cast. What's a branch like in 2020? What's mobile banking? What's online banking? What's our product strategy? And we do this for technology as well. And I love this. This is an excerpt from a longer presentation I do which is entitled, I Will Be Mostly Wrong. So as we futurecast, you can guarantee further out you're going to be wrong. Something very interesting we see with Apple is around, I probably should put the Apple Watch up there, is around wearable technology. And wearable technology has been around for a very, very long time. The first one was the first pocket watch, I believe. You can imagine back then, in those times, people would probably stop and stare at the first person with a pocket watch. I'm not sure if they called them geeks, but it must have been amazing. They must have gone, wow, that's like my one, which is this big in my house. How the hell did you get it in your pocket? And time has been a focal point of innovation for about 3 centuries. And in fact, it was this year, 300 years ago in June, that one of the first X Prizes happened. You know the concept of the Space X Prize. Get a rocket up there, win some money. The British government actually was so serious about time, they passed an act called the Longitude Act. Has anyone heard of the Longitude Act? Yeah, it's a bit out there. So the government passed an act. So it's the X Prize. If you can produce a clock which is accurate to X, Y, Z, I think at the time they were giving away about $5 billion. Why did they do that? Because the only way you can tell where you are in longitude, how far around the Earth you are, is by measuring what time the sunset comes up. You can measure how far up and down with like one of these sextants. You see them in the movies. It's like a big metal kind of protractor thing, which measures distance from the horizon to the sun. And so it was so important because shipping for the British was how they stupidly went around the world and stuck flags in places. All the things they did in commerce and warfare, but all the European powers. What would happen though? Ships didn't know where they were. So they kept sinking. There was a massive amount of loss of life and loss of money as well. And so an amateur watchmaker, John Harrison, invented a clock called number 4. I think Chanel copied his naming algorithm there. And he won the prize, but the British government, being the British government, they never actually paid him that much. They never gave him the $5 million, and he died poor. Sad story, but time was 300 years, from about mid-1400s up to about 1700s. A lot of the world was focused on accurate timekeeping, and that has nothing to do with this, apart from the fact I've got a watch. I thought it was interesting. So wearable technology, we're starting to see the phone essentially disintegrate around our body. The first watch I had was a little digital watch, and then I had one you could play games on, then I had one that actually had a television on it. It lasted about 2 minutes, which is probably enough time to watch Channel News Asia, and the battery went. And then watches stopped advancing. They went backwards. They returned to jewellery. Anyone notice that? At the time, I noticed it straight away. I was like, why did they do that? What happened? It's the mobile phone. Mobile phone had better battery, better screen, better input. The smarts went from the watch to the phone overnight, and watches just went retro and went back to jewellery. Really interesting. And I knew then, I said, they'll be back. Once the battery gets better, once the screen gets better. So we're starting to see this. And we're starting to see devices which start to understand our world, like Google Glass is coming. And so the next wave is around really connecting that machine, which is starting to get smart enough to understand our world, directly into our world, and then converging the human world with the digital world. And as this accelerates, why would you have something on your face when you can have things in your body? Why have glass when you can have a contact lens? Why wear anything when you can have smart clothing that measures pollution, measures heat, and actually changes the nature of the fabric to cope with that? We're starting to see an explosion in wearable technology, and that's going to cross over into the Internet of Things. The Internet of Things is probably the single most important thing that's happening at the moment. Why? It does 2 things: transparency and efficiency. So if you can understand what's happening in a black box system, for example, your electricity meter, if it's anything like Australia or the UK, you get some man or lady will come around once a year and read the meter and tell you how much you've got. Now they put SIM cards in them. in real time you can see your usage. Because it's transparent, in real time, then you can actually change your behaviour and get efficiency. So there's a prediction that this will save $17 trillion in economic value by 2020. So we're going to see lots of things connected to the internet through low-cost sensors. A good example is your home. I've been waiting for these fridges for a while. They can understand the objects in there. They know how to combine the objects. I think my girlfriend calls it cooking, which is nice. But it gives you the lineage. So it tells you about these eggs when they're fresh, the milk. But what's happening with the Internet of Things at the moment, and I know Google are trying to pull this together, it's a load of disconnected internets of nothings, or little things. So you've got one that does your cooling at your house, another one that you can get on your phone to open the door, another one that does your electric. None of them talk together. The only time you ever see them together is through your phone screen. And so as we see in technology, you start to see these kind of disconnected systems, then someone comes up with standards, and then we see some kind of unification, and then you'll probably see some level of silos being created, like the Apple Internet of Things, the Google, the Microsoft. And then we'll start to see real value. But for us as a bank, well, it does give us, and with wearable technology, it gives us two things. One is much better insight into our customers. Obviously, if our customers allow that, we can learn so much more about their lives. And that's a big passion of mine. Not their banking lives, it's their lives, what we're trying to do. Every milestone in our customer's life essentially has a financial impact. You know, those ones and zeros, they represent that success of that person's life in our database. Second thing it does, it gives us a new and more emotional way to engage. Now, I worked at Microsoft for 7 years, but even I did not get emotional about a browser. I tried. We went out for dates, didn't quite work. But I have a more emotional connection with my phone. And so our customers love their phone. It's their status symbol, it costs money. And then on the other side, we hold all their money for them. And I'm not saying we as a bank or any other banks in the room, but what we tend to do is put some piece of rubbish on their lovely phone for them to connect to their money, which is a shocking thing to do, really. And they get emotional about it. But they're going to get more emotional about things like watches and clothes and those kind of interactions as well. But the Internet of Things, they're already putting sensors in farm animals, in fields, in bridges, in machinery, in lighting, in roads, because they want that transparency, and with transparency brings efficiency. The final one is around digital intelligence. And I'm not really going to go into what makes, a machine intelligent. I don't even know what makes a person intelligent, in fairness. And I'm certainly not. I mean, I don't have any qualifications myself. But if a machine seems intelligent, I kind of like it. And there's the bank in Australia who have a little chat robot that sells you credit cards. And I worked on that project, and it's Australia, so remember that. And we put it into pilot with some customers. And I checked in on it to see how it was doing, and it said to me, "Would you like an effing credit card?" And I went, "Oh my God. Okay, I think we need to switch off the learning engine." Because what customers have done is Australians do use a few expletives. My girlfriend's Australian, I know very well. They taught it, and of course it's learning. I thought, well, yeah, this is a great new word, I'll use this all the time. So what we had to do, we switched the thing off, the learning, and people just thought it was quite a good FAQ. It was actually cognitive computing with no learning on it. So it's quite an interesting experiment. But we're starting to see these a lot, especially in the consumer space and our work on Watson. But in consumer, the thing, ideally, as a bank, you want one staff member to one customer. Of course, we can't do that. I mean, we've got 5 million customers. But how can you get that feeling? And what happened is machines took the human out of banking. So rather than go to your local branch and have your passbook and chat to the manager, Machinery got in the way of that. It gave you internet banking, it gave you mobile banking, it gave you things where you don't have any human interaction. It gave kind of mass credit scoring. It kind of limited what the branch manager, the decisions they could make. It put you in a box as a segment. But machine's going to bring that back as well. So as we go through the next wave, you can pick up the phone. Maybe in the future you'll talk to a machine. It'll route you through to the right person. Maybe the machine actually gets to know you a lot better as a person and makes recommendations like we're trying to do with Watson and the relationship managers. And this is going to accelerate further. They say by 2040 to 2050, a machine will be smarter than a human, will understand things like biochemistry, physics, maths, more than any human. And I think that's going to be a great place. They call it a singularity. People describe it in different things. But what I especially love is when it understands maths more than any human ever could, and we ask it a question, and it gives us the answer, we don't know if it's right or wrong. And then we have to trust it. Because we don't know. It's gone beyond our understanding. And I think that's a wonderful place. Just don't watch the film Terminator too much. But I think it will solve problems that we have no understanding of how we can solve them. I'd just like to show you a short video. This is from Microsoft Research. Do a manual one.
Hi. Namaste. Podcast Wagat. Hi. Thanks for coming to the triage kiosk. I'm in touch with the best doctors in the world. Are you here for your child or yourself?
For my child.
So how can I help you?
He's been having diarrhea.
Oh no. Sorry to hear that. Hi there. What's your name?
My name is Mono.
And how old are you?
6.
So, 6 years old, right?
Almost 7.
Okay. 7 years old. Have you felt nausea?
I don't know.
I'm sorry. Has your child been vomiting at all?
No.
Okay. So let's see. Has there been a fever?
A slight.
Have you been feeling tired lately?
Yes.
Let's see. How about abdominal pains?
He's not complaining about that.
Has your tummy been hurting?
Yes.
Oh, I'm really sorry. I hope it will feel better soon. Okay. Has your child been losing weight lately?
No.
That's okay. Have you noticed whether your child's stool looks funny? Is it black or darker than usual?
It's darker than usual.
Okay, let's see. Considering everything you told me, I'd like to schedule an appointment with the doctor, just to be sure. However, not to worry, I'm not that concerned at this point. Can you bring your child to see the doctor this Friday at 10 a.m.?
Yes.
Great, hope you'll feel better, and we'll see you then. Bye-bye.
Bye. Thank you.
Come on in, have a seat.
Thank you.
Did you have a good journey?
Yes.
How is he doing now?
Yeah, slightly tired.
Are you still complaining of it?
Apart from the fact the nurse terrified it. Yeah. I think the sincerity engine on that needs a little bit of work. You wouldn't want it to deliver any bad news, would you? That would be but you see where it's going. This isn't mocked up. This is quite real, but it's not out there in the market, so to speak. So it's still in research. But it certainly gives us an interesting vision of what's happening in the future around, as this technology gets a lot smarter. So in summary, we're focusing on information and data in the right way and acting like an e-commerce company. both through using IBM Watson and a joint labs with a load of PhDs from ASAR. We're acting like a startup. We've been very agile. We're getting the business to test their assumptions, to experiment. We're acting like a tech company by using leading-edge technology and staying ahead of the curve. But more importantly, we're still delivering securely and at scale like a bank. So thank you for listening to it today.